Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to analyze in the first of its kind presentation analyze the results of Reliance Industries and HUL, which have come up as poles apart. So let's understand how the results have been and what are the implications for it for the stock and the market. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I start with the analysis of both the results, here's a small request that kindly support me through Patreon, and once you do that, I'll make better videos on YouTube and do better research like I've done in here uh, for YouTube videos. And once I have more than 150 200 patrons, I'll start with a definitive course on investments here on YouTube for free. The patronage there starts at $2 and goes up to $25 a month, so kindly check that out, that what are the different tiers and memberships that you have. Apart from that, I have also started with an online payment system through UPI, so kindly contact me through the email if you want to support through that as well. So let's start with the analysis, and let's understand how the results of Unilever have been. First of all, about the stock. The stock has run up a lot and is currently trading at 60 times earnings at around 2200 rupees or so. It has fallen 3-4% this week in the 4-day week. But let's understand the numbers. The profits have come in at around 1520 crores, and which is down 1.2%. These expected numbers are from CNBC, and the expectation was of 1800 crores, so it has been a complete miss on the profit front. And in fact, on the revenue front, it is down 9.4% at 9000 crore. The expectation was a slight drop in revenue rather than this major 9% drop in revenue, and the revenue was expected to be closer to 9900, and it came out to be around 9000 crores. The volumes declined by around 7%, whereas it was a growth of 7% last year, and the volume decline was expected to be around 2%, no more than that. But we had a volume decline of 7%. The domestic consumer growth was merely at 2%. The foreign growth was even worse. It showed a contraction in nature, and EBITDA stood at 2065 crores and margins at 22.9%, whereas the expectation for EBITDA was around over 2500 crores. So this is a miss of over 20%, and the margins again was expected to be around 25.6%. These are the EBITDA margins we are talking about. And remember that Horlicks and Boost will show their revenue in full earnest in the June quarter, because the GSK, you can say, amalgamation has taken place only from April 1st this year, that is April 1st 2020. So considering all these numbers, it has been a mess on all fronts, and this really tells you the state of the economy that we are in, because all this panned out just before, you could say, the lockdown took place, and probably only 10 days of lockdown or 6 days of lockdown was priced into these numbers. So we can understand how the economy has shrunk in the manner just before the lockdown, and after this we could see a devastating effect on the economy itself. So what numbers show us? Basically, a struggling economy, that even people buying into FMCG or goods that require only 10, 15, 20 rupees a product is not quite being sold at the same level as it was last year. People are not able to earn that much as last year, even before all this lockdown thing and everything happened. The struggle was always there, and impact of shutdown from start of March. So actually the management has come out and said that this COVID thing and all the impact of this shutdown and everything else started from March, and March 10th 15th, and not quite that it did not impact in the last quarter, and this will have a devastating effect on all the FMCG sector. So we could expect on Monday that most of the FMCG stocks would fall big time, because they had run up, uh, thinking and people analyzing that they are able to sell more because there's hoarding of food that is going on across India, and people want to buy more so that they stay at home and so on and so forth. But these numbers show a different picture, and probably the June quarter would be even worse, and we could have a situation where the company could post a very low profitability, and the profit decline could be in the region of 13-14%, even more, we don't know. But this is a very devastating sort of numbers that are coming out from HUL. uh, I believe that the things will even worsen going forward in the next 6 months, and probably what we had thought that the economy is in trouble, and really these prices of the stocks that do not match what the economy is doing. These numbers show us, and probably vindicates as to what I was saying, that most of the companies and most of the stocks that have run up, which are economy based, say in autos or discretionary consumptions or FMCG, are going through a very difficult phase, and these 60-70 times earnings, 40-50 times earnings will not sustain, and there are companies that are trading at 100-120 times earnings. So I don't know where we are headed, but we could see major corrections in all these stocks. So I believe HUL would go down on Monday. Let's see how much it would end up being. So what needs to be done? I believe that you should add on massive decline. So it is not to say that HUL is a bad share. So if you have held on to the stock for the last 2-3 years, you're making big profits. Probably you need to take out profits at this point of time. If you have bought it for the short term, then you need to exit, because the stock could well go down to 1800 or below 1800 levels very easily from here on. Probably may go down to 1600, 1650 from these levels in the next one and a half months. uh, you do not expect that the next 1 year would give you strong returns. Yes, probably it would be up 8-10% if you buy on major declines and hold on to it for a year, but it would be not viable to buy these shares or FMCG shares for a year's time frame. I think if you're buying into it, then have a good 6 year view and take advantage of this opportunity. So probably if the stock goes down 10% on Monday, you buy a few shares, and then if it goes down another 10% over the next 1 month, you buy more and buy big, and then even if it goes down a further 10% for the next 4-5 months and goes to 1600, 1550, you buy an enormous bit, something like 40% of your total holding you buy at 1500, 1550, thereby having a very good average. And just hold on to the stock, even if you are not able to do an SIP or add on to it. Just hold on to the share for 4-5 years, 6 years, and it will give you very handsome returns, because I think things will normalize. But the next 6 months would be extremely difficult for all these stocks into the consumption domain, and I would not be surprised if all these types of companies would come up with extremely even worse numbers going ahead. So valuations should correct with P contraction going forward, and this goes out for all the consumer companies. But that is not to say that you don't buy into them. Probably wait for that major decline set to buy into such consumer names and make good profits over the next 5, 6, 7 years. And this is what I have been saying over the last 2, 3 months, that these opportunities would keep coming. Don't worry about the markets going up, because the individual stocks will not perform that well in terms of its profitability and numbers, and they will correct eventually. So after the analysis of HUL, let's understand how RIL has done and what needs to be done. So here are the Reliance numbers, and Reliance Industries have shown very good numbers, although it is a mixed bag, but I'll make you understand why the numbers look really good and what lies ahead for the stock. Here's a standard disclaimer that I right now hold the stock, and I bought it as a trading play just a few days back. That is a standard disclaimer. The profits have come in at around 6,350 crores, which is down 39%. But there has been an inventory loss, an exceptional loss of over 4,200 crores, something like 4,260 crores or so, due to the demand destruction in the oil and gas segment. Basically, in the oil and gas segment, we have seen how the prices have gone down and what all has taken place. And the company has written off something like 4250 crores or 4280 crores in it, and that is an exceptional loss because this will not come in again, say 1 quarter or 1 year down the line. So if you take that out, or taking that exceptional thing out, then the profit stood at 10,615 crores against estimates of between 10,500 to 10,550 crores by different channels, news channels. It has come in line or slightly better, and that is why I'm saying that there was a fear that these numbers could be extremely bad and even worse than what is estimated, like we had in the situation of HUL that I just explained, but this has come in better. What is even more positive is the GRM, which has come in at $8.9 per barrel, much better than 7 to 7.5 to maximum $7.6 per barrel expectations by many analysts, and it has come in just below the $9.2 per barrel that came in the last quarter. So although the revenue dipped, there was demand destruction in the oil and gas segment, yet the GRM was maintained. And remember, the Singapore GRM is staying at around $1.2 per barrel, whereas Reliance is producing such enormous GRMs at $8.9 per barrel. A dip in oil and gas revenue and widening losses has taken place, and which was expected. You need to understand, both domestic and export markets are hit badly in the oil and gas space, because this is the major, you can say, business of Reliance Industries, and that's why I'm focusing onto this space, which has done, you can say, relatively well, but compared to expectations. But you can understand, year on year, it has done extremely badly. Now the big positives, or what are the positives that have come in? The Geo numbers, or Reliance Geo, and probably most of you might be using Reliance Geo at the moment. Kindly write in the comment box of which, you can say, company do you use, if you're able to write that. Geo has shown positive traction, and ARPU is at 130.6 rupees. Expectation was around 133 134 rupees. It has come in at 130.6 rupees, and there is an expectation that 1 year down the line this could even go up to 180 190 rupees, because ARPU will expand because of this work from home segment. So current work from home scenario will boost Q2 and Q3 numbers. I'm pretty positive that this will percolate down to till September, and we could see even Q3 numbers would trickle in with some amount of work from home thing. So the Reliance Geo Internet will be used even more. Geo Giga Fiber will have more, you can say, expansion into the segment, and Geo Giga Fiber is not quite reaching to everybody, and probably in the next 3 6 months it would do as well. So all these things taken into consideration, Reliance Geo might as well have an ARPU close to 170 180 rupees going forward in the next 6 to 9 months. The net profit from Reliance Jio was at 2,331 crores. That is an increase of a whopping 177%, and revenue has grown by 26% with the additional addition of 80 million subscribers by Jio in this quarter. And the EBITDA expansion was at 4.84%, so 484 basis point expansion of EBITDA has taken place from Reliance Jio. There has been more announcement for investors, and this is even more positive for people who are holding Reliance shares, and for the company as a whole. The rights issue has been placed at 1 is to 15, an announcement of a right issue after 30 years, and that is, you will get one share for every 15 share held, at a price of 1257 rupees. So you'll be able to buy one share of Reliance Industries at 1257 rupees if you're holding at least 15 shares of Reliance Industries at this point of time. They plan to raise, or the management plan to raise 53,000 crore. Now, what is interesting is that the management would itself put in everything, whatever their percentage is, into this rights issue, and so this rights issue should be fully subscribed no matter what. And this is another big positive for the shareholders. A dividend of 6.5 rupees announced, as was last year, so 6.5 rupees remains, although there has been a major hit in terms of their refinery business. Even Reliance Retail is going to suffer a lot in the June quarter, but yet the dividend is maintained at 6.5 rupees, which is pretty decent. Plan to reduce debt by around 33%. 1.03 lakh crore should be reduced this quarter itself, and probably that comes out to be like 53,000 crore from this rights issue and 46,000 crore from the Facebook deal. So you get around 99,000 crores already, and probably 4 5,000 crore here and there. So they will be able to do over 1 lakh crore. So from around 3.2 lakh crore that they have as debt, and people were talking about all this, they are going to shave off 1 lakh crore in only in this quarter. Also, what they have mentioned is that the Aramco deal is not off, and actually it is well and truly on track. And probably what I think is, and what most analysts believe, and I concur with that, that deal might take place at a lower value. That deal might take place at a lower price band, and Reliance would like to take that deal through so that they are able to become a net debt free company, or a zero net debt company, by the end of FY21, which Mr. Ambani has always talked about. So I believe that this will go through, albeit at lower price band, and so we'll have this deal also. Plus, there's one more thing that the company has announced that more investors are interested into buying stake into Reliance Jio, and I don't think that Reliance would stay away from selling that stake, because they want to monetize as much as possible from Jio in this current situation where the demand for internet and Jio is huge. Probably later on it might not be that big, because Airtel would come in and probably other players might come in. I don't think duopoly would remain. So this is perhaps the best time to eke out best, you can say, prices for Jio, and probably that paves the way for an IPO 2 years 3 years down the line, to have an exit for Facebook, etc. So that is what I believe Jio is up to. Kindly write in the comment box, what do you think all these mean for Reliance Jio, whether we'll see an IPO or not, and what do you consider about the results. So what needs to be done? I believe that you can hold for long term. Company is changing its business thing. So they are moving from oil and gas to, I'm pretty sure they're moving towards a technology kind of a company, and they will command more PE, or better PE, than 1920. And so geo profits may accelerate in FY21, as I explained with this you can say work from home thing could continue for another 2 quarters. The Reliance Jio numbers could really scale up even further. So you can buy on major declines, and it could make new highs by the end of the year. So buy on major declines, but avoid if you have a short term view, because you don't know where it would end up in a 3 to 6 months time frame. But if you have a good 3 4 year time frame, then go ahead and buy. So this was a video on Reliance Industries. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Thanks.